Hello, chart watchers, and welcome to this Tuesday, June 25th, 2019 Market Watchers live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Market's still struggling a little bit here. We got the Dow Jones Industrial Average down 50 points today. The S&P 500 down 11. The NASDAQ down 56, not performing well on a relative basis. While the Russell 2000 actually is performing a little bit better today on a relative basis, it is flat. 10-year Treasury yield back down below 2% again. Don't want to see it going back down, taking out the low from last week, but right now we are challenging that. Down about 4 basis points, 1.98%. Volatility index has been on the rise here over the last 4 days as the market has struggled to break out further into record territory. Real estate and materials continuing to perform pretty well, still in uptrends in June, while you can see communication services rolling over, technology also having a rough day so far today. Among the industry groups, internet stocks pulling back and challenging the lows that we saw last week, and home builders, we'll talk about some economic reports out, but home builders having a very rough day today. Toys tried to make a breakout yesterday, looked pretty good. I wanted to see a little follow through. We're not getting that so far today. We'll want to see how the toys group closes later today. And then a big merger announcement. You can see AbbVie, ABBV, the acquirer, and Allergen, AGN, the acquiree. And they are both heading in different directions. And that is not unusual at all. You normally see a lot of dilution with a company that is acquiring the other company. And with Allergen, of course, their price was bid up. They saw a nice premium. So that is why we're seeing that that divergence there between those two companies. But they are the biggest movers, or two of the biggest movers in the market today. Okay, Erin, it's Tuesday. We got a special day lined up today, but how are you doing so far this morning?
I'm doing quite well. The sun looks like it's going to come out. Right now, it's still a little overcast here on my side of Southern California.
Yeah, well, I'm in a different SC, South Carolina, and we had some nasty storms roll through last night, but and I think some of it's lingering in the market with a little bit of, I don't know, some storms rolling through a couple areas of the market today. As I mentioned, the home builders really taken a hit so far today. Kind of surprising. I'm expecting them to bounce back with that 10-year Treasury yield back down below 2%, but that'll be an interesting development later this afternoon to keep an eye on. Mm-hmm. We also have a special guest with us today. I didn't know if I should introduce you as a co-host or as a guest. Mary Ellen, a little different. You're on here with us on a Tuesday, but we got a lot of fun in store. How are you doing today?
Oh, I'm doing really well. Thank you. Yeah. Excited about our little segment coming up here.
Yeah. And for those of you who are new to Market Watchers Live, Mary Ellen is generally on the show with me on Fridays, and we have a signature segment that we do, what's hot, what's not, so you want to check that out. But what's really exciting, and I know we'll go into this in just a minute in the upcoming schedule, is the two of you will be starting a new show coming up. That's very exciting. Big plans?
Oh, it's going to be great. I cannot wait. The crazy thing is, you know, we've talked to a lot of women in the industry and they are very excited about it. But having gone through that development, you know, we found, and you can agree with me, Miss Mary Ellen, because I know we've talked about it, that a lot of the issues that we want to talk about and cover really apply to everybody, not just women. So
that's right.
I think we'll give people a different perspective, but you'll still get lots of information that you want to hear about.
Yeah, well, it is going to be very exciting. I'm really happy for you. I always say, you know, this is our first spinoff of Market Watchers Live. The two of you going out on your own doing a show. I think that's awesome. Looking forward to it.
But, we learned from the best, Tom.
That's right. John Murphy. No. My dad.
What was that, Erin?
My dad. I learned from the best.
Oh, absolutely. Why don't we got a lot going on, so I'm going to just pass it over to you. What do we got coming up today?
All right. Well, as far as our upcoming schedule, there you have it. Tom, July seasonality, looking forward to that one. And of course, our new show. Our roundtable will start after the technical news and headlines on pop culture stocks. 10 and 10, our first symbol will be OKTA. Market outlook, we're going to finish off. The three of us are going to discuss what we see coming up in the market over the next month or two. So you'll want to stick around for that. But let's go ahead and get started. Technical news and headlines.
All right, sounds good. There was a pickup in the economic reports earlier today, so I think it's this is kind of important because it ties into what we're seeing in the Treasury market today. But April Case-Shiller came in lower than expected. The FHFA house price index actually came in a little better than expected. But check out the May new home sales. That was a shocker when I saw that this morning, and I think it was a shocker for the overall market as well. 626,000 versus 680,000. This is a spring season type of report, and that number was the lowest new home sales since December. So I thought that was kind of a telling number, and I think that's kind of what has the market spooked a little bit today. And then finally, June consumer confidence down quite a bit from what was expected, 121.5 to 132. I'm actually a little surprised that the overall market isn't seeing more selling. It is, just in the midst of just a handful of industry groups. That's where we're seeing most of the weakness today. But really, the reports that came out, I'm a little surprised we're not seeing more selling, and maybe we will by the end of the day. But as far as the 10-year Treasury yield goes, if we pull up that longer-term 3-year chart, you can see that we have now clearly established a low beneath that September low, and that does bother me. As long as that 10-year Treasury yield keeps moving lower, you would think that it's going to have a positive impact on the home construction, and it has throughout the past 8 months or so. But with that new home sales report coming out earlier today, that has been problematic for the entire home construction group. But right now, that 10-year Treasury yield just simply, I keep trying to predict a bottom in the yield and a top in Treasury prices, and I keep being proven wrong as the market does its own thing. It's hard to enforce your will on the market. The market does what it wants to do. And right now, a lot of money continuing to pour into Treasuries with those yields dropping right now, 1.99%. Another close below the close we saw last week, I think could open up maybe down to this gap support area. We could be talking below 190. And that is just, for me, it's a little concerning to see the 10-year Treasury yield drop that much, because it does tend to signal, well, it can signal a couple things. And I think one of the things it's signaling is that with commodity prices, for the most part, being lower, that inflation is tame. But it also can signal economic weakness. So we want to continue to watch that as we go forward. Earnings reports. There were a couple of earnings reports out earlier today. And those reports, if you look, Lennar, that's a home construction company, home builder, came in well ahead of expectations. I mean, that was kind of a shocking number, given the fact that we're, seem to be struggling in the overall home construction group. But I will point out that Lennar is down 5.4%, even though they did come out with a nice report. It is trading right now at lows we haven't seen since back in early April. And so the market's reaction to the report has not been very good. FactSet Research, FDS, also coming in better than expected with, you can see the earnings 10% ahead of expectations. This is a company that's had a really strong run in 2019. If you've looked at a chart, stock was up, I think it's probably up about 60% so far this year. So with this report, we are seeing a little bit of selling on the news, stock down about 1.5%. After the bell, check out this lineup: FedEx and Micron Technologies, two stocks that really, when you look back in 2019, you would say probably haven't been very good. We saw FedEx first few months of the year bouncing off some very oversold conditions, but now we're back down close to the low as they release their earnings later today. And I think that could be a sign of maybe, well, we'll see whether or not the worst is yet to come. But certainly Wall Street not excited about FedEx. And then Micron, it has been down. It's down near the lows that were established back in December, much closer to the lows than to the highs that were hit back in May of 2018. So a couple of companies that have been showing a lot of relative weakness going to be reporting after the bell tonight. That may not help the market. We'll see how they come out. All right, let's pull up that Lennar chart and take a look at it. And also maybe take a look at the home builder group as well. All right. So Lennar is ticker symbol LEN. This is a longer term 3-year view. And you can see Lennar was one of the leaders back in early 2018, had a very, very rough throughout 2018 was very rough. And now in 2019 has had an uptrend in play. But this weakness today, not boding well. I'm going to shorten this, maybe look at a relative strength chart here. But you can see with this move down today, the relative strength dropping, and we are almost down to those relative lows relative to the home building group that we saw at the end of 2018. So Lennar, even though they came out and beat, it's not always about the news. It's how the market reacts to the news. And I'm not liking what I'm seeing here with Lennar at this point. FactSet, which is FDS, pull this one up. And you can see this, I think, looks much more constructive. They came out with better than expected numbers. They're in the publishing area, which has been very strong. This stock has pulled back a little bit as it's consolidated. But on this pullback, I think we're just testing the breakout area. I believe as long as this stock holds its 50-day moving average, I would be okay buying it on this weakness. So two stocks, I think, going in different directions in terms of their relative strength. All right, a couple of other areas to look at. I wanted to bring up the the internet stocks. Take a look at the group relative to the S&P 500. They're down. The internet stocks are down about 1.3% last time I looked today. But this overall downtrend that started back in April still seems to be in play. You can see the weekly PPO, the weekly relative PPO, moving into negative territory. I think this is a group that's showing some mixed signals at best here. I would be a little concerned until we can see internet stocks on a relative basis move back up above their moving averages. That is not the case at this point. Also, let's look at those home construction stocks. DJUSHB on a relative basis. Now, yes, we're seeing weakness, but this is a group that has been moving higher. And right now, this is actually the time when normally in an uptrend, this wouldn't be a bad time to maybe be thinking about entering the group. As I mentioned earlier, 10-year Treasury yield under 2%. That should bode well for home construction going forward. Yes, the May report wasn't good on new home sales, but the stock market looks ahead. So this could actually be an opportunity, I think, on this pullback to maybe take a look at some home construction stocks. But if I did that, I would be looking at some of the best performers, not Lennar, which on that relative chart has been one of the worst performers. Yesterday, I talked about the toys group potentially making a move to the upside, trying to get back up above this 20-week EMA. I think we've done that, but if we look at the toys group on a absolute basis, the problem is we couldn't sustain the move above this breakout area. So we went up, actually, I think cleared this March high by about 3 points, fell back, but we are moving off of the earlier lows. If we can get back up over 850, I think this is a very bullish development on the toys, something to watch and keep an eye on. And then I'm going to go in and show software, because software has been weak, and you can see the overall uptrend, though, remains very strong. I just think this is a group that needs a little bit of profit taking, perhaps, on not only an absolute basis, but on a relative basis. Still think this is a strong group. Okay, we are going to move into the scooter mover of the day. And when we look at this, one of the top stocks here in the large cap you see is HCA. I just wanted to mention this because healthcare stocks, we've been talking about healthcare doing well, these healthcare providers doing pretty well. And now you've got HCA, one of the top scooter movers today, making a breakout to a multi-month high up over that 135 level. So volume picking up, starting to see the stock hold its 20-day moving average, PPO above the center line and rising. I think that there's a lot of positive characteristics here. So that is your scooter mover of the day.
All right, it is time for some upgrades and downgrades. Let's go ahead and start off with GLOG. GLOG was Gas Log Limited, and it was upgraded today by Stifel from a hold to a buy. They moved their target from about $17. See if I can get this working here. So they moved their target from $17, which you're looking at around, well, right around there, and they moved it up to $18. So that would hit probably right in here. So they're looking at moving their target now a bit closer to the tops that we saw back here in earlier in the year in January and February. The one thing I would point out is the PMO right here. We do have that buy signal coming in oversold territory, and you are seeing a little bit of a double bottom here coming in, but we have a line here. This is your confirmation line right in here. So we still do need to get above that. We haven't quite broken out above that confirmation line. And if we do get that breakout, you're going to be looking for a move, well, about the size of the pattern. And that would give you, it'll probably put you around $15 here, just underneath. So that's one that I've been watching there for the upgrades. The next upgrade is going to be Grubhub, and a pop culture stock indeed that we might even be talking about a bit. It was upgraded today by Citigroup from a neutral to a buy. They moved their target from $75 all the way up to $91. So that's pretty much right in there. So what I would be watching is, we got the breakout. We've got a nice little gap. You could see even a flag formation here. There's your 20-day EMA crossing above the 50-day EMA. You already have a positive PMO that is rising. Technically, if you're looking in the last year, it does seem a bit on the overbought side. But if you pull this back, you can see that the tops for the PMO have gotten much higher than what we're seeing here at about 2.5, I think is where we're looking at as far as the PMO. So something to keep in mind. Nice rounded bottom going on here. And we are starting to see a little bit of a breakout above that previous intraday high. Next one up is going to be GTES, Gates Industrial Corp. And you can see this one's a little newer, so I'll bring that out just a wee bit. All right. Get too crazy. All right, there's our PMO buy signal that has come in. Obviously, you're getting a really nice move. You can see tons of volume coming in on that first move to the upside. This is a pretty nice little breakout here. You have to enjoy a 3.5% move to the upside on an upgrade. But where is our overhead resistance going to lie? I would be looking. I mean, you could call these bottoms in here as resistance level. But honestly, I'd be watching more at this gap to see if we can get that filled. If we're really on an upgrade, if we're really going to make a move up to the $15 range, that's where you want to watch, is in that gap. So the resistance, I'd say, is closer to 15, which, well, by the way, matches up with their $15 target. So sometimes they do agree with, they do our same, oops, not BHT. They follow some of the same support and resistance, obviously. They're not, they pay attention as well. All right, BHF, Bright House Financial, was actually downgraded today by two agencies, Credit Suisse and Goldman. Both of them moved them into a sell or underperform category. We have two very different targets, though. On Credit Suisse, their target, a move from $35 down to $22. I'm betting it's right down here at that low, right here, 28. So it's even lower than that. Their underperformed target at Credit Suisse is even lower than the support level back here at that December low. I'm not so sure I'm on board with that one. $37 is the other one that came in here from Goldman. So there we go. It's 37, right about in there. So that's the target they came up with. So we've dropped well below that target, but obviously they're expecting to see a move back up there, maybe a beat of that resistance level and the 20-day EMA. I'd be watching that. But look at that PMO. It's pretty darn ugly here. I mean, we're looking at a sell signal coming in below the zero line. I certainly wouldn't be interested in this. I can see the downgrade. And apparently they downgraded it because they were thinking the drop in the interest rates will probably hurt their business at Bright House. Hexo, I know we've talked about a great deal here. It was downgraded, though, today by Oppenheimer from an outperform to a perform. So they're moving into, a, let's move that over here. They're moving into a position of, a neutral position. So I wouldn't be too concerned about that. But you can see we're at some very, very important support right now at these lows from February and March. Watch that closely. That $5 level is going to be key right here. That's what I would watch very closely. That support needs to hold at $5. If that doesn't hold, where are we going? Oh, I would be looking much further down toward that December low. So you've got a PMO that's at -5 at this point, but you can see it could still go even lower. So, I talk about room to run on the upside. This is plenty of room to fall on the downside for Hexo. And finally, our last one is Tiffany. Loop Capital downgraded it from a buy to a hold. So they're going into that neutral position. You do have a PMO buy signal that has come in on this rally. We're pulling back from this, the rounded, there's that rounded bottom and what looked like was going to be a handle, but I wouldn't be too excited to see one dip that low. It certainly takes away from the pattern when the handle comes down and tests the lows that you've been seeing already. So I wouldn't go there with that pattern. Next area of support would be right about here at 85.80. So that's what I would be watching for. The PMO is still on a buy signal, but if we continue down lower, lose this short-term support, come down and test that area at about 85.80, then I would expect to see that PMO turning down. I would want to see a lot more action out of the PMO moving to the upside if we get down here and get a bounce. And that's all I do have for the upgrades and downgrades. There you go with the list of what we covered. And stay tuned for our roundtable on pop culture stocks, and that'll be coming up shortly.
StockCharts is unique because we combine the commentary, the education, as well as the tools in which you need in order to analyze the markets.
The human component around it with all the commentators that we have. I mean, look at the lineup with Murphy and Pring and Morris. These are household names in the industry. They're all tied to StockCharts.
People are always surprised with how many tools are on there that they didn't know about. 5 or 6 different methods for finding relative strength as an example.
Not only do we have these really great chart tools, but we have this amazing chart school, and you have these shows, and you have all these ways that you can learn.
Okay, welcome back everybody, and we are set to begin a discussion about pop culture stocks. I'm really excited to have both Mary Ellen and Erin here with me today. And, when you think about, or at least when I think about pop culture, I think about a couple of, I think about Investors Business Daily with William O'Neill. I know, Mary Ellen, you worked with him, and, they're constantly tracking some of the best stocks. So if a company is going to be one of these pop culture stocks, it's likely to hit that list. I also think back to a really good fund manager back in the 1970s and 1980s, Peter Lynch, who worked for the Fidelity Magellan Fund and produced annual returns, average annual returns over 29% for 13 years, and did so well that he retired in 1990. He took a fund that was worth, I think, $18 million and took it to $14 billion in the 13 years that he was here or there. And what was interesting is he talked about some of the things that he would look for. And Mary Ellen, we were talking about this a little bit before the show, but he looked for just some of the things that were around us every day. Toys R Us and some, names like that you just see were places that you just ordinarily would shop at. And he would take those basic ideas and themes and turn it into great performing fund. So I know you've done, you looked at some of these older stocks, some companies maybe that kind of fit that pop culture theme from prior years. First of all, what do you think about the pop culture show that we're doing here today? And what do you think about some of those older names?
Yeah, I think it's really relevant that people do stay on top of what's popular, because if you go back historically, and I can show you some views here of charts over time that have done really super well. You look at the top 10 performers every decade, and undoubtedly you are going to see a stock that is popular. So here we're looking at RCA. This is back in the 20s. Radios really picked up in popularity. So in the late 20s, this stock gained 740% in 12 months' time. We're looking here at Condé Nast in 1944. The stock blew up 500%. They were one of the best performing, most popular publications of their time. And then, of course, Mattel stock. This is taking you back to the 1960s, and actually the late 60s. They came out with the Hot Wheels, and that was in addition to good old Barbie came to us in 1959. She was joined by Ken in 62. But from there, it just goes on as far as Mattel, and you can see again almost 500% price improvement. So we can go through each various time period. The 1990s, Gap was up over 3,000%. We go into the 2000s, and for those of you that remember UGG boots, they're still very popular right now, but Decker's outdoor up almost 4,000%. So you can, hopefully you're getting a sense of, if you have that ability to stay on top of what's popular. If you're older, I often say, speak to your grandchildren, your children. They're going to tell you what's the latest, greatest, because we can, this is when online trading came on in the mid 90s. We saw Charles Schwab, E-Trade, all of those stocks up over 2,000+%. Now I'm taking us in. This is a headline actually from IBD, and this is from 2 years ago. And they were talking about how with Instagram and Twitter, everyone taking their photograph, there was a big rise in cosmetic stocks. So we can see, for instance, Estee Lauder from a 14-month period was up over 100%. So
yeah, I would just say, if we could just do without selfies. Yeah, I don't know about this whole pop culture thing, but the selfies got to go.
Well, with the makeup too, it's interesting, Tom, because now you can put these filters on. I don't know about you, Mary Ellen, but oh my goodness, the filters take care of all of that, for makeup, everything.
Yeah,
I've come to very much love that, and I'll do those selfies for sure.
Yeah, I try to stay away from that. But Erin, I know with Decision Point, because you all are a mechanical trading system based on the moving averages and so forth, as things become popular, I guess, Decision Point's going to be able to track that, because as we start to see that money rotate into some key areas of the market, whether it's technology or whatever, your numbers, the moving averages, are going to direct you into those areas.
Oh, absolutely. And of course, the PMO as well. One of the things we talk about a lot at Decision Point that I think is quite relevant to the pop culture stocks are parabolic moves. Because a lot of these, of course, after an IPO, you almost always see that big move to the upside and then a quick pullback, as the stocks kind of gain their ground. But those are the things that we would look at. And of course, yes, you're going to watch those EMAs and see which way they're going, which ones are tracking, where the price is in regard to it. And of course, the crossovers that we always cover. But the PMO, I think, is fairly useful. It's a little dicey at the beginning, when you don't have the data to actually calculate it properly, but it definitely will give you a feel. My husband, I'll give him a little bit of a shout out. He talks about the pop culture stocks or the things going on, and how does that really shouldn't you be paying close attention to that as far as the charts are concerned? And, yes, but let's face it. I mean, we are technical analysts here, and, Decision Point, like you're talking, there's mechanical signals. There's a lot of that already baked in to the chart.
I'm going to go ahead and show a screen chart. You all probably have heard of this company, Boeing. Mm-hmm. And so, we just think, I don't know, I just take for granted now the airline industry. But, if you go back 50 years, this was an area of the market that clearly was pop culture. I mean, as you were getting, more and more people were starting to fly. I mean, that was new, very new back then. And this is, to your point, Erin, Boeing, which I know on an adjusted basis was down at 39 cents. Imagine, going back and telling yourself just to put 39 cents away for Boeing, back in 1968. But initially, you can see this huge pop. I mean, we had almost a 4 times move in Boeing back in 1968 after it went public. And then you can see the next 5 or 6 years were very rocky until finally we got into this long-term uptrend. So I agree. I think, some of these companies just take off. And one that I maybe would also, we could take a look at is Starbucks, because Starbucks, when it went public, immediately tripled in the first year and a half and never went back down. So these IPOs that do change the way we live, some of them take off and just continue moving higher. And then you have others that need that pullback and, go through maybe a phase of where the market is just throwing all kinds of love at that stock and then needs to settle down for a few years before really we can begin to value these companies. I know personally for me, I don't like to trade these IPOs in the very early days because a lot of times there's so much hype built up that you really need to let these things settle down and be able to study their business model and let the price action kind of move back and forth. But I thought maybe what we could do here, Mary Ellen, is talk a little bit about some of these companies maybe that are newer. And when I say newer, I'm not just talking about in 2019, but I'm literally, instead of going back to the 1960s, maybe there's some companies that you've seen since, say, the internet bubble, the last 20 years, last 2 decades, that have really begun to show some relative shine and have been pop culture stocks, and maybe also share some more recent in 2018, 2019. But what do you think?
Yeah, that's actually a great idea, because when we look at a lot of these IPOs that are out now, we talked earlier about Beyond Meat and some of these others that are really just erratic in their trading. And see if I can go ahead and...
Yeah, Beyond Meat is one that has just been absolutely all over the place.
Exactly, and true to Zoom and some of these other IPOs. So what I have here is a peek at Facebook. They first came public in the mid...
Yeah, I'm not seeing your screen.
Oh, okay. Nope. We'll go ahead and try that again. I was going to take you back to mid-2012 and show you that particular stock. I think we're a little better tuned in here.
There
it
is.
Super. Okay, yeah. So here we had the initial IPO, and there was quite a bit of hype surrounding Facebook's coming public. It was a very, very popular application. It was very popular among investors, and we can see the anticipation that it did gap up. But from there, it did drop. And this is very typical. We can look at Pinterest. We can look at any number of IPOs this year. The exuberance is quite high, and then it falters a bit. As time moves on, you'll also enter that 90-day period when insiders have the ability to sell. So historically, you are better served with these, unless you're a super short-term trader, you're much better served to hold off and wait to go ahead and enter the stock. And so what I'm showing you here is the beginning of their ascent as far as the stock's price. And the whole reasoning for this big gap up here was all about earnings. The stock gapped up 30% on the release of strong earnings and sales. And that's really what it took, because a lot of this during this period, there was a lot of uncertainty as to whether the company could in fact sustain and grab on to users to the point where they could grow. And all of this was about advertising. Their ad sales spiked. That meant that there was sustainability, and we can see that the stock has then since then gone on to really great heights. And then another one, oh, I'm sorry, we can go back.
No, go ahead. I want to see PayPal, because that was one I know that we had talked about before the show. So why don't you go ahead and go through PayPal?
Yeah, so this is another super popular, this concept that you can now mobily pay for things. This is for whether you were an individual selling products, or now more recently with Venmo, you can move cash around to your friends. But back here, all of this was the company, again, IPO. It went up quite a bit on their initial IPO, then faltered. And it really bounced around quite a bit for some time. This is taking us over a year. And then this big gap up, of course, similar to Facebook, this was the company, the number of users exploded. So the company reported strong earnings, again, a signal to investors that they have a solid, sound foundation. People are really flocking to their product, and the stock since went on. So the bigger point is oftentimes that overexuberance in the beginning, those of you that are super short term, you can play that. But by and large, with most of these IPOs that go on to great heights, oftentimes it'll take about a year, maybe 18 months before they have settled in and proven that they can really sustain their growth path.
Yeah, and I think, we were discussing earlier too, because the GDP is comprised 2/3 consumer spending, that when you start looking at some of these pop culture stocks, and really whether it's been in the past or as we look into the future, a lot of this is going to be based on where people are spending their money, because of the huge impact that it has obviously in our GDP. I was looking back at some, companies, stocks like VeriSign. It seems like the combination of the consumer spending, the consumer, but also technology-driven areas. So where you've got companies that maybe combine the two. When I brought up Starbucks, I think that's a perfect example. You think of it, okay, it's a coffee shop, they sell food, it's a restaurant, but it's actually a little bit more than that. It became really a cult, and I'm part of it. I mean, I write my blog every day from Starbucks, and it's a place where you don't just hang out and have a cup of coffee or get your coffee and go. Some people do that, but there's also a group of people that actually it became a part of their life. We switched from going to work every day. A lot of folks obviously still do that, but there's a much larger group now that telecommute and work from home. And so they've found a place at, say, a Starbucks to be able to work and to
and Starbucks has really capitalized on that. The growth with that company is tremendous. They're continuing to expand and evolve. So that's actually a very good example. I don't know if you can see my screen, but what I have here is a tech timeline. And so again, this is all going to be consumer driven. And Erin, do you recall we talked about BlackBerry? It used to be called Crackberry. When they came out, and the stock really exploded. This is an example, however, of something that we are going to talk about, how oftentimes these fads, these more popular stocks, they don't all last. There are those handful and those few that Google, prime example, came out in '98 and is very, very in a sustainable uptrend. But all of these within these technology is Apple, the iPhone, the iPod. So all of these technology companies that have been able to sustain their uptrends and their growth capabilities, those companies have been able to evolve. And I think Apple is probably one of the most prime. And Erin, you were talking about that earlier as well, as far as their product developments and starting out with their Apple computer back in the 80s.
Yeah, Erin, actually, I want to switch over to you. Maybe you have some companies you can share with everybody, some maybe newer ones that you follow. I know you're much more into the social media scene than I am, for sure. So maybe there's some companies you can share there. But I do want to remind everybody before we get into that, that we are running a poll. And we want to get your thoughts on pop culture. Now, some of the companies that we're talking about, Starbucks, Boeing, we didn't talk about McDonald's, but obviously that's been a big name for a long time. These are not the kind of companies that we're putting in the poll because they've already had huge runs. We're talking about, many billions of dollars in market cap and so forth. What we're looking for in the poll, and maybe you all can kind of share your thoughts, are companies that have gone public more recently. Mm-hmm. And even though some of them have been bid up and they do have some serious market cap, and valuations, most of these companies are going to be companies between about 8-10 billion to the downside and maybe 20-25 billion topside in market cap. So they're companies that are beginning to change the way we do some things. And just want to get your thoughts, or do you have any special thoughts about any of these 6 companies that we've listed in the poll? So make sure you take that poll, because at the very end of this segment, Mary Ellen and Erin and I will take a look at that, maybe give you our thoughts on some of those companies as well. But Erin, did you have any thoughts on some of the newer companies?
Well, I know that, Snapchat, big one, when that came out as an IPO. I mean, my kids are, both of them, they're in their 20s. And they basically, that was where you migrated from Facebook is now, your mother's app. It's not the cool thing. Snapchat sort of took that over, with Instagram. Funko, I think, was one we were talking about. I don't get it.
Erin, could you pull your charts up and show everybody as you're going?
Actually, let me get that. Sorry about that.
That's fine.
So this is one that I was looking at, Build-A-Bear. I was actually kind of shocked that it's still around. I was involved in it, obviously, when my girls were young. And again, you have these big moves up. The fad sort of, moves out, and you have that sort of period here where we didn't get much going on. But then there you go again. It's these parabolic moves. I mean, the fad stocks you just have to be careful about. I mean, we could talk about stocks that, the .com crash, of course, there's lists and lists of those. But, Krispy Kreme donuts, some of these companies that went public that just didn't really stick around. And like I said, Funko was one.
How can you go wrong with a donut? Right?
No. Well, it was a fad though, right? It was super popular. Everybody was it was so exciting. And then as with fads that we have to watch out for, it failed. It just, people got bored.
I think too with Krispy Kreme, it's funny, you go from a Krispy Kreme and now we're with Beyond Meat. So
right.
We're kind of going all over the place here.
Look at this. This is Funko. This is pretty much right on par with what we're talking about. They get their initial offering at, you've got this big bar in the beginning, and then you get that parabolic move. And then when parabolics, as we always talk about at Decision Point, when they fail, they usually fail hard and drop very quickly, very fast. So what we always recommend with parabolics is a trailing stop. That might be something to consider if you're starting to trade these fad stocks.
Yeah, and for those,
that's
I was just going to say, for those of you not familiar, Funko makes bobbleheads of popular cultural figures, both sports world, entertainment, and so forth. And I don't get it. I really don't. But everybody's sharing their wizard, app. Harry Potter, they're sharing their codes all over Facebook and everywhere else. I mean, it's just one of those things.
But that raises a great question. I mean, when you look at these stocks, I mean, I'm sure if you looked at a Starbucks chart 20 years ago, 25 years ago, you would say, oh my gosh, this is in a parabolic. And yet it turned out that if you had still bought it, you would have done very well. So when you look at these stocks and we start thinking that they're game changers and life changers, how do you know the difference between if it's just a short-term fad or if you should be putting your money in? I mean, is there thought?
Yeah, I think there definitely are, and this is something that Bill O'Neill spoke about quite a bit. We can even talk about Walmart when they first came out, a total game changer as far as big box store offering products at lower pricing. And the big shift there was strong management. You had Sam Walton, and even at Starbucks, their founder, very, very strong management, and then also continued earnings growth and evolution as far as
great customer service too. Let me throw that in there.
But you can watch the chart, like we were saying earlier. I mean, it is a fad stock, maybe, but watch the chart, watch those EMAs, watch the PMO. It should give you, chart patterns, parabolics. It should give you a little bit of a hint as to where to go without having to necessarily know what Pinterest is or whether it's going to be a staying power. I mean, you get a lot of it just out of the chart. That's what I always preach, hey, tell me about this company. I'm like, let me see the chart. Yep. I don't want to give you my opinion until I pull up my phone and my lovely StockCharts app and go, oh, see, here's the chart. And that's what this is telling me. I don't necessarily pay so much attention to the story because a lot of that, like I said, is baked into the chart. You watch the chart. It's going to help you even if you don't know what the fad is. Like I said, Funko, totally, I don't get it.
I would also throw in there, I mean, if you watch the scooter scores, the scooter rank that we have at StockCharts, it's an exclusive feature here at StockCharts. And I just pulled up the scooter reports for mid-cap stocks, typed in technology, and you look at the list, and these are the companies that are performing the best relative to their peers in the group. So you're looking at technology stocks and comparing which ones are performing well relative to the others. In the top of the list, this is one of the stocks that we added and put it on the poll today, Roku. It's got a scooter rank score, and I know earlier today it was down, and I think it's having a little bit of a rough week. But this is a company that has performed extremely well, and it stays at the top of this list. So if a company comes out and you're concerned about, okay, is it a fad or is it something that could be longer lasting? Well, one thing you want to do is see where the money is going. Obviously, if it's a fad, it's going up. If it's long-term, it's going up. But if this scooter rank score stays high, even when it pulls back, if you see a scooter drop to maybe 70, 75, and then once again, we see that money rotate back in, I think that's giving you some heads up that, hey, Wall Street believes that this is more than just a fad. So,
and I was going to add to that. Oh, go ahead.
No, go ahead. Go right ahead.
And so Shopify, that is another classic popular pop culture in the sense that they provide a cloud software-based platform for enterprise, for entrepreneurs who have products they want to sell. Kylie Kardashian has her site on there, and Shopify is a fantastic company. Growth prospects are phenomenal. So I think we were talking before, as far as investors, where would you search for these pop culture, popular? And Tom, you're spot on with technology, and I would say consumer discretionary. Those are going to be your two areas over time, historically, where these higher performing stocks that are being driven by consumer demand. That's the area.
Yeah, and I think too the media is going to focus on those areas as well. I mean, you're not going to get a lot of excitement out of the industrials or the financials. I mean, even though you mentioned a company like PayPal, which has kind of transformed some things in financials, I agree with you. I think that because there's so much money spent in that consumer area, that it's going to be very difficult to have something that really changes the way we do things. It doesn't at least have some tentacles in consumer discretionary. I thought maybe what we would do, because we still have a few minutes here, is maybe each of you can talk a little bit about some of these stocks that we have on today's poll and just kind of give your thoughts before we bring the poll up as to which ones maybe impact you the most, or if maybe you have some opinions based on the charts. But Mary Ellen, why don't we start with you? Looking at the stocks that are in the poll, which ones strike you as maybe a stock that might have some staying power here?
Yeah, I'm just going to go ahead and see if I can share my screen here.
And I want everybody to go in and complete that poll, because I really would like to see what everyone else is thinking. But we have, your screen didn't come up there, Mary Ellen.
Oh boy, I'm having screen issues today. Erin, do you mind grabbing it? And I'll
have all of them in a candle glance right now.
Wonderful.
There we go. Not super big, so I'll go ahead and we can look at it 10 per page. And of course, with some of these new ones, Beyond Meat being one of them, we don't have a whole lot of data there. But to me, this is showing me exactly what we're talking about. The IPO comes out and you get that parabolic move, starts to come down, and then it finds its trading zone. And then we wait until something happens, and then earnings or whatever it turns out to be, and then you get in.
Do you have one of the, I mean, we've got Beyond Meat, Pinterest, Roku, DocuSign, Spotify, and Etsy. I mean, is there one that just kind of appeals to you? Let's, forgetting about the charts, and just your own personal life and the things that you see and what your kids are into. Is there one that kind of stands out to you that maybe, is something to maybe watch if we just ignored the price action and just said, this is a great concept?
Right. Well, I honestly, if you're going that direction, I would go for the more boring of all of these, which is DocuSign. I know I used it to buy my house. You've been in the process of purchasing, so you've used it, and it's time saving. It's just one of those things I think you'll always need. I mean, it's not totally faddish if you want to go there.
Yeah, I remember when Google first came out. And I used to sit there and think, okay, how are they going to make money? I mean, I just type in a topic,
right,
search, And I'm like, this is not a good business model. I don't get it. And of course, it's come out to be one of the largest companies in terms of market valuation in the world. But Mary Ellen, kind of sticking to that same theme of these 6 stocks, not necessarily, based on your moving averages or anything else. Is there something that you use, or that, maybe family or friends, that you hear about, or maybe you've
Yeah. Yeah, I would say, and Erin, actually, I'm surprised you didn't talk about it, but Etsy is just a very popular product. This is an online platform, again, that allows craftsy individuals to sell their products. And they're renowned for their high quality. They also have the rankings. Tom, you talked about customer service. Each of the sellers are rated, and their products are really, really just very creative and very, they have vintage as well as current goods. And the company's growing. They actually increased, if you have your products online with them, you do need to pay a 5% fee on what you sell. They raised that about a year ago, and it has not looked back since. They're renowned. Management is great. They are always updating their technology there. So I would think Etsy is certainly one to keep an eye on. It's not having such a great week, but longer term.
Oh yeah, Stitch would be the other. I just don't know that it has staying power, but I use it. I've been using it for like over 2 years because I just don't have time to dress myself. So they give me those latest trends and everything, but I couldn't vote for that just because I'm not so certain about the staying power, mainly because of the competition.
They're finally coming around. Analysts are really starting to upgrade Stitch Fix.
Mm-hmm.
Yeah.
That's
Go ahead.
I'm going to go with Roku. That to me, when you get back to the way things are transforming. I mean, it used to be that, Disney had its pictures and you would go to the movie theater and you'd watch a Disney movie or whatever. And I just see a major transformation that is taking place right now among consumers with Netflix, Amazon, Disney, recently coming out with their announcement, that $6.99 a month deal. What is it, Disney Plus or whatever the heck they call it. And I think Roku, I think all these bigger companies are justifying the future. I mean, they're basically confirming that this is the future going forward. And Roku is one of those companies that's just it's big enough to kind of throw its weight around a little bit, but it's small enough to have a lot of potential growth going forward. So when I look at Roku versus a Netflix, I think Roku, because of the tremendous upside that this company could have. They seem to be hitting on all cylinders. They've been coming out with some really good numbers. Analysts I know have been raising estimates, lots of upgrades. So of the stocks on this list, I'm going to agree with the overall audience. The poll is up on the screen now. But I think Roku would be my choice of these 6 going forward. And I think they're all interesting, by the way.
Oh, yeah. I had Roku not low on my list, but lower. I haven't studied all their products, so I'm only making just a general thing. But Roku was, the big thing was getting the sticks, like the Fire Stick from Amazon. But I feel like they compete a lot with Apple and Amazon, and that could be a problem for them. But if they stay innovative with their products, then yes, they have a nice niche market. But
you raise
I worry about the competition there.
You raise a good point, though, because sometimes how do you get rid of your competition? You buy them.
Right.
So
you look
that's
at
what we've seen on a lot of these, huh?
Yes.
Yeah. Instagram bought out by Facebook. Yeah, that was a great purchase.
Yep. So, if you get a company like an Amazon who starts to feel like you got a smaller company, Roku nibbling at your heels, sometimes the best thing to do is just throw money at them and bring them on board.
Right.
That gets rid of your competition. And some of these companies, I mean, the Amazons, the Apples, and the Googles, I'm still wondering at some point maybe if there's going to be some antitrust issues going on there, because these companies are getting so big.
Right.
And they do. I mean, sometimes they just buy out their competition, and all of a sudden, what competition? So anyhow, I thought that was a really great segment. I want to thank both of you and thank the audience. Yeah, thank
Yes.
the audience for participating as well. I do think that those are 6 companies. And maybe just to wrap it up, and I don't know if you have thoughts here, but what about Pinterest? Because I look at Pinterest and I think the same thing I thought about Google. I don't know how they make their money or what they do, but I don't use Pinterest. So any thoughts on that one?
I
Yeah.
love it. I don't use it as regularly as I should, but it's such a great filing system for when you find things online. It's really a filing system. And you can set up your recipes. Oh, I love this outfit, so I'm going to put that in here. It's just a really great filing system is what
It is
find.
a great go-to, but Tom, you're bringing up a great point. That is a big question mark, is how are they going to monetize their advertising? The earnings estimates are down for this year, and they're only calling 2020 2-cent per share earnings, but that might be enough. But yeah, you actually bring up a very good point.
All right, well, this was fun. And you know what would be even more fun is maybe every year coming back and revisiting and maybe talking about some new pop culture stocks. But it's been a blast going through this. I think that every investor is doing what we're doing here, trying to figure out, are these companies that are making these moves beyond meat with this huge move, are they legit?
Sustainable, yeah.
Well, I know I felt the same way about Starbucks, Tom. Here we are, the generation, we figured out how to charge $5 for a cup of coffee, yet still get $2 Chuck wine. What does that say about our generation?
Actually, to end it, but you can look at Panera Bread. That was a big winner in the 90s, the first company to sell an $8 sandwich.
Right.
It blew up, but it's not doing so well now.
Yeah, selling water. Who thought?
Well, we could go on and on and on, but
Yes.
I'm going to go ahead and move on. That was fun, though. It was exciting and interesting. Let's go ahead and jump into the 10 and 10. Mary Ellen is going to stick around, and later in the show, at the end of the show, last 15 minutes or so, we're going to talk about a little market update, and give you our outlook maybe over the next month or so. So that'll be another interesting panel-like discussion you want to stick around for. But let's go ahead and get into the 10 and 10. What do we have there?
All right. Well, I haven't obviously been able to collect all of them. So we'll go ahead and start with OKTA. OKTA.
Yeah, OKTA. It's a software company.
Yep. And then vote for the one you want to see next, guys, in the chat room. And that will be the next one. And then I'm going to work on getting all the others.
All right. Sounds good. OKTA. First thing I will say is, again, software has been a great area of the market. OKTA has been one of the leaders. And as long as we remain in an uptrend, I find it difficult to go against a company like this. I'm sure, again, if you looked at scooter ranks, OKTA is one of the highest ranked scooters among technology stocks, among software. So I think it's a great company. Now, as far as trading it or investing in it, where to buy, when you get a breakout, that prior resistance becomes support. So right now we're threatening the 20-day moving average, so far holding it. I think that's a good short-term signal on OKTA. But if we do manage to lose it, and I've been looking at some of these software stocks that are doing the same thing, I wouldn't be shocked if maybe we get down and test some key price support, maybe even a 50-day moving average. You see that does happen from time to time. You think that a stock's just going to keep going higher, but look back to early March. It was a quick week down where the stock went from over, almost $90 a share, and a week later it was 70. That's how quickly these stocks can move and really scare you. OKTA was over $135 at the end of last week or toward the end of last week. Today it hits a low of 121, sitting right on the 20-day moving average. I think the current price down to price support at 115 would be the great entry area on OKTA. So that's an area that I would be focusing on if I was looking for entry.
All right, let's see. The most popular in the chat room is Kratos, KTOS.
Yeah, this is another defense stock. I really like this stock. I think we're in a cup, maybe a handle forming right now. Let's just show you. In order to have a cup with handle, for those of you maybe who are not as well versed in technology, what you're looking for is an uptrend, which I think we clearly have. Look at the volume coming in. I think this is a really nice uptrend. And then a parabola to form the cup. And so here, I just take this from the high there, come down to this low, and then back up here. And I think you can see this cup. So that is a continuation pattern. Normally what you'll see to the side is the volume begin to come out. Volume was heavy on Friday, but that was quad witching day. A lot of stocks had a lot of extra volume. I wouldn't pay too much attention to that. You can see the volume, I think, drifting lower here as we pull back. I would look for this handle maybe down to the 20-day moving average, but what you really want to see is a breakout above $23. That would then measure up to from the depth of this cup, which is a little bit more than $2. So I think you could maybe be looking for 25, 25 and a half on this stock.
All right. Let's see. The next one I'm going to give you is LLL.
Another defense stock, and I own LLL. This is one of the best performers in the defense group. I think another one that's kind of in that little bit of a cup handle formation, but just illustrated that, so I won't do it again. But what I will say is that I've been talking about the defense stocks regaining their strength. And when you look at this relative strength right here, yes, we had a little period back earlier in June. We pulled back, but I think the overall uptrend is in play. And when we look at LLL versus the S&P versus its defense peers and the overall group in defense, all of them moving higher, I think that this bodes very well for the stock to continue this move to the upside. As far as where maybe to keep a stop, I think the recent low down about that 240 level is going to be an area that I think I'd like to see the stock continue to hold. I suspect we're going to see higher prices here.
Okay, next one up. Let's do Domo, D-O-M-O.
Yeah, this was a leader in the software space for a while, and then it kind of fell apart and really hasn't regained its strength at all. And so it's continued to trade below that 20-day moving average, which is now declining, and below the 50-day moving average. I think if you look at most leading software stocks, you'll see the exact opposite. You'll see that 20-day moving average well above the 50-day moving average. So another way to say it is that this is a company that simply is not performing well on a relative basis. So I think things are changing. I think the word is getting out for whatever reason that this stock is maybe losing some momentum. Maybe their fundamentals in the next quarter are not going to be as strong as what they were in the last quarter. And so I have a little problem with this stock in this near term. Now, if we could get back up above that 20-day moving average, that would be the first step. And you can see we just continually fail at that 20-day. When I was showing you OKTA to start the 10 and 10, that company's coming down and testing the 20-day from above. You've got a company like Domo, which has been trading below its 20-day and failing from underneath. I think that gives you all you need to know right now. I would stay away from it.
Okay. We talked about this one a little bit at the beginning of the show. Zscaler, ZS.
Yeah, this is another one that I think looks really strong. Pullback, but again, you're going to see these pullbacks from time to time. Try not to get shaken out as long as the overall technicals hold. I think there are a couple of maybe different ways to look at this one, but the overall relative strength, as I just showed you, here, I'm not going to annotate, but you can see for the most part continues rising, which I think is great. One other technical point to make here on the chart is maybe just keep an eye on this trend line. We're seeing higher lows going in each time we pull back. So maybe, we make sure that this prior low at the end of May, early June holds. But I suspect we're going to continue to go higher here. And I still like software, and I think this is one of the best stocks within the group. So I'm a fan of ZS.
Okay. Next one I have for you is a real estate development company, IIPR.
Right, IIPR. Okay, on the chart, oh yeah, nice breakout here. Look at that volume coming in. Now, it's not in a great part of the market. So on a relative basis, you've got a horrible area of the market. But this stock, even with that group being so weak, is still an easy outperformer, and the volume supports this. What I would be, because the group's been so weak, I definitely would not be chasing a stock like this. But I think your best reward to risk entry looking at a stock like this, if you're looking for entry, would be a 20-day test. I just think that initial 20-day test will likely see a bounce if we get down there. Maybe we just sideways consolidate for a bit. And if we do, maybe that recent low that came on Friday here will act as support, and that 20-day will rise underneath of it. So if we consolidate, come back down later and get back to about that 117, 118 area, that could coincide with a rising 20-day moving average. So that's maybe something to think about as we go further down the road. I like the stock. I would keep my stops in play, though, because if you're in an area of the market that has been underperforming as a group, I don't want individual stocks starting to lose technical support. So watch that 20-day.
All right. This one is pulling back nicely. Biotech, Regenix Bio, RGNX.
Well, I do like the bios in general. And this one has started to show some pretty nice action here, trading above its 20-day moving average. There are others out there like Illumina that are trading better. So I would probably just watch this 20-day. If you start to move back below, especially the 50-day, I'd probably look elsewhere in this group. But short term, I do like what's going on here with the volume trends.
Okay. How about Constellation Brands, STZ?
Yeah, STZ, I think, had the big gap down, and this was with the whole Mexican tariff, 5% tariff thing that was being bannered about. And then we rallied back, and now we've kind of rolled back over again. I just think we're in a downtrend here. You can see all of the relative strength moving lower. So I would just maybe wait, because I believe we'll get maybe another test of this area down around 175. That was prior high. We established a key low there. I don't see any reason to be below the 20-day moving average and buying here, because if we fail to get through the 20-day, we have about, maybe $4 or $5 to the upside, and we've got probably $8 to the downside to hit this support area. So I don't like the reward to risk on the long side. I'd just be on the sidelines for now.
Okay. How about Baidu? I don't think we've looked at that in a while.
Yeah, I wrote about this one in my blog earlier this morning. It's having a rough period, but what I wrote about is their seasonality. So I'll just talk about that very briefly here in 1 second. But the thing that would keep me out of the stock until we start to see some relative strength is the relative charts. I mean, not only are we seeing a stock that is obviously under a lot of pressure, and look at the volume selling, but we just talked about the internet group that's kind of losing its luster. And this is a stock that has been one of the worst performers in the internet space. So when I look at all that, there's no way I would be interested in the stock. But I do want to just point out that the seasonality suggests if we do start to see a little bit of a technical strength, or maybe we put in a double bottom, this might be a stock that would be worth a flyer for some of you, especially if you like these stocks that have been in downtrends for a while. It's not really my cup of tea, but if we pull up the seasonality and drag this back 15 years, which is as far as it goes, look at the average return July and August on Baidu. 10.6% in July, 11.6% in August. That's over 22% average for July and August going back the last 15 years. So if you start to see some technical reasons to get in, maybe seasonality would throw you over the edge and maybe add to that bullishness.
All right. Next up is PAG.
Great. Is this the last one?
Yep. Penske Automotive.
Okay. This is one I think that Mary Ellen and I looked at on Friday when we were at this stock or that stock.
That's right.
And Penske, I think on that move Friday, that false breakout, I think that set this up for a pullback. However, I do like the fact that it has been holding this rising 20-day moving average. And so as it pulls back here, I think there's a pretty strong reward to risk trade because it is in the specialty retail group, which has been pretty strong. And if we could get a breakout, if this stock could get up and move to a multi-month high at the same time getting this price breakout, I think this is a stock that could maybe make a run. So I think getting in on a 20-day test, a little aggressive. You're getting in a little early, but I could keep a pretty tight stop. So I'd be okay with Penske at that level.
All right. That completes the 10 and 10. Here are the symbols Tom just annotated. Go to the articles tab from the homepage and click on the MarketWatchers live blog. The link to all these charts and the past 2 days are right there at the top of the blog. All right. We will be right back with the final market update and another roundtable on the current market outlook. All right, it is time for our final market update. Market's not too healthy this morning. Currently, the Dow Industrials are down over 100 points, 0.42%. S&P 500 following suit, down 0.64%. The one that's being hurt quite a bit today, though, is the NASDAQ. It is down over 1% currently. New York Stock Exchange, we're seeing lower on the day as well, down 0.38%. Russell 2000, struggling here as well a little bit, but not taking it on the chin quite so much as we're seeing on the other indexes. It's only down 0.16%. Canadian markets took a dive earlier today and now seem to be consolidating or digesting that move. Treasury yields are lower on the day, but looks like they're trying to move back up toward the open, toward yesterday's close, but we are looking at an exactly 2.00%. VIX is traveling higher, of course, with the market moving lower, a little bit of anxiety out there. Currently reading at 1623. UUP starting to make a move. It was consolidating this morning, starting to make an upside move. And interestingly, and what we would expect, gold did open higher, but it is pulling back just as the dollar is starting to rise. USO oil is up 3 cents at $12.04. TLT gapped up, but is now consolidating sideways. Big winner right now for the day, if you want to call it that. The material sector is the only one in the positive category, up 0.12%. Biggest loser today is comm services, down over 1.5%.
All right, I have a couple things that I would like to show, and you just mentioned the materials there, Erin. What's interesting is with the dollar struggling, I'm not finding it too surprising that materials have been leading. So taking a look at this 1 month chart of the different sectors, you can see that materials has a pretty nice lead now over the last 30 days. This is a group that's been underperforming the S&P 500 for 8 years, mostly because the dollar's been in an uptrend. But with the dollar weakening recently, that's actually given some impetus to these material stocks to lead the market to the upside. So it's actually holding the market up while some of the other areas we see some profit taking. So that was one thing I wanted to mention. But I also wanted to bring up the home building stocks, which I talked about earlier, because they are taking a big hit. I said earlier, I think this could be an opportunity, and I just wanted to kind of clarify what I meant by that. When you look at the chart, the last time we had selling at the end of May, we kind of held this breakout level, which was around the 780 area. So we came back, we tested it. Well, today's low went down here and tested it again. So on a daily chart, I think this is an area that we certainly, want to focus on. And then we go to a weekly chart on the home construction group. Look at it testing that 20-week moving average simultaneously, which has been holding throughout this uptrend. So in my view, you've got a very solid reward to risk entry into home construction with this selling. I know a lot of folks, you look at it and you say, wow, it's selling off. I don't want to get in because nobody wants it. But this is actually the time in an uptrend that you do want to consider taking a shot, because if it continues moving lower, a close much below 780, you could probably get out of the group. So anyway, just wanted to point that out. I thought the home construction, this pullback is representing an opportunity there. All right, we are going to move into our final segment. This is just taking a look at the market as we move forward and some of the areas that we're going to focus on maybe over the next 30 days. We've got earnings season only 3 weeks away. I'm going to go ahead and kick this thing off by taking a look at the market recap that I did in my blog today. I pointed out the small caps, and this is a group that really has just not performed well. We talked about the S&P 500 recently going up to an all-time high. If you look at the small caps, you can see that the Russell 2000 here, not only is it not above the May high, but it's also still way below the high that we saw in September of last year. So the relative strength here has been dismal. And that shows up on another chart that I had put into my blog today, which is the relative strength. This goes back 20 years, so the last 2 decades. And when you look at the relative strength, you see that the small caps relative to the S&P 500 are at a relative level that we have not violated since back in 2004. This is an area, and I know you look at it and you say, well, it's been going straight down. I don't want to think about small caps, but it was looking the same way back in early 2016 before we had massive outperformance in small cap stocks. Same could be said back in 2008, 2009, early 2009, right before we had this huge move to the upside. So sometimes when these areas of the market are overlooked and beaten down, we can see some significant outperformance. Now, I'm not saying that the Russell 2000 is just going to go flying back to the upside, but what I am saying is that it is at an interesting level as we look forward and we try to predict maybe some things that could happen. I want to watch these small caps because I do think that small caps is an area where we might see some emerging leadership, or at least something I want to be paying attention and watching. So why don't we go over to Mary Ellen? I don't know if you have some themes, Mary Ellen, that you're looking at?
Yeah, absolutely. And so what I wanted to key in on is first we can start by just taking a quick look at the market movers today. I know, Tom, you talked about a number of these stocks that are on here, but we can see that it's fairly dominated by healthcare. And of course, we had the buyout with AGN, Mylan, HCA, and it's switched out, but Biogen was on this list. So what I wanted to do quickly is go ahead and take a look at the healthcare industry group. And of course, XL, see if we can do this. And what you'll see is a very significant pickup here. Now, healthcare prior to this breakout here was very much underperforming the broader market. So it's really nice, it's healthy to see this pickup in this healthcare area. Not only is it attributing to a broadening out of the markets, but we would like to see these weaker areas pick up. And of course, last week we had the Pfizer purchase of ARRY, and then this week the buyout. And these big pharmas did say that that was how they were going to approach their growth. They were going to be on the prowl for buyout candidates that could assist them in their growth prospects. So we're looking at Merck for those of you that are interested in larger cap names. This stock is a bit advanced here, but it is very much in an uptrend. We can see it's finding support at that upward trending 10-day simple moving average. Another large cap pharmaceutical name that we can take a look at is Roche Holdings, another one that broke out here 2 weeks ago on pretty big volume, and it's still finding support at that upward trending 10-day simple moving average. Your RSI and MACD are in good standing. The last large cap pharma I will draw your eye to is a name that has not turned quite yet, but certainly worth taking a look at, and that's Eli Lilly. We can see that it's been deteriorating in line with other healthcare stocks. Attempted turnaround found resistance at this downward trending 50-day simple moving average. It's poised again to try and break up. The RSI is not quite positive. MACD had that positive crossover, but is not back up again that above that net neutral. So I would look for this break above that 50-day combined with your other outlying signals technically for keep an eye out for a turnaround here. And then one other area, Tom, you talked about biotechs, and they do appear to be potentially turning. We can take a look at IBB, which is the more aggressive. This is the NASDAQ Biotech Index, and it did slip back yesterday. It's hovering here above this 200-day simple moving average. I would keep an eye on that. If that remains and holds traction, that would be actually positive for the markets if these riskier biotechs can come more into play.
Yeah, Mary Ellen, do you think that the healthcare group continues to lead over the next month? I pulled up the XLV, and I'm just showing everyone here that we did get this breakout above the March, April congestion on that XLV, and also from a seasonality standpoint over the last 20 years, I pulled up the XLV versus the S&P 500, and you can see June has been a standout historically. So in the summertime and even the next couple of months, July and August have shown slight outperformance versus the S&P 500 over the last couple of decades. So with that group looking technically, do you expect this to continue for the next 30 days?
Yes, I like what I'm seeing. When you see these big cap pharmas picking up, that's what's going to help the buoy the entire group. And then also there is a defensive feel to it, and I kept waiting for that to come into play. So during this continued uncertainty, not only geopolitically but China trade wars, these can also parlay as a defensive area. A lot of high yielding names in there.
Yeah, and I think too, I just pulled up the XLP versus the S&P 500. But when you get into the summer months, and you can see that June, July, August, September, all of these, the XLP has a history of outperforming consumer staples, outperforming the S&P 500. And you look at something like utilities, and in the summer months, well, August stands out for sure, September. So as we get into these months where the market has a tendency to struggle, or, at least historically, we've had some pretty big drops in these summer months. I think that the overall nature of the market sometimes is just to grow a bit defensive as we head throughout these summer months, not necessarily predicting anything horrible. I just think that folks say, okay, maybe this is the time of the year that I want to be just a little bit more defensive. And I think that helps areas like healthcare. But, Erin, continuing with this theme over the next month or so, and we're heading into earnings season, looking at your decision point models, are there areas that you like?
Well, I was just looking at the market as a whole to begin with, to give us a sense of where we might be at. And these are my short-term indicators. So these are the ones that give me those signals that would be more of that short-term time frame. And, when the market is strong, those defensive areas tend to not perform quite as well. And right now, I'm not seeing the kind of weakness that would maybe drive me to that area of the market just yet, because I'm looking at these indicators, and I've highlighted the areas where they tend to oscillate above the zero line. You can see right here, and that tells you that excuse me, there's internal strength going on. And you can see by price action that pretty much matches up, pretty well, as long as you're staying above that zero line. The volume one tends to move down a little bit lower than the breadth indicator. But what I'm looking at right now that I think is really important is that we came down here, excuse me, we were rising. So it looked like a negative divergence, but what it is an oscillator has to oscillate, and it had hit overbought territory, so it had to head down. The good news is, to me, is seeing those bottoms come in on those short-term indicators. Those, I think, are important to look at. If you wanted to look at, let me go ahead and find my decision point scoreboard to share with you. Take just a moment here as far as the sectors go. And as far as the sectors go, everything is still looking pretty good for the intermediate to long term. And, when you're looking at the signals in the shorter term, I can tell you pretty much all of them are on buys as well, except for energy, which, has just been an underperformer and not where I'd expect to see much action at this point. But, I think the market still looks pretty healthy. So I don't know that necessarily you're going to be looking at those defensive areas quite as much. But at the same time, there is uncertainty here. We could be building a double top. God forbid. I don't want to throw a lot of flame and fire out at you, but certainly, it's only been 2 days of a pullback, but it's something to pay attention to. We might even go down and test that low down there. But right now, my indicators in the shorter term are just not that negative. So that would be pretty much my market outlook right now. And if you come back and we talk about breadth and the VIX all the time, I'm still not getting the kind of climactic readings to the downside that would have me, really concerned. And the VIX is sitting right there in the middle of those Bollinger Bands. So it's not even in the very short term telling us to expect something, exciting or different. I would say that this week we're probably going to be pausing, digesting, the rally that we just had. We're pulling back a little bit, get those indicators so that they're not so overbought, and then we'll be ready to take that move back up.
Yeah, I think the point you made about the S&P and maybe it being a double top, when we've had Dave Keller on the show before, he's talked about these biases that we get. And I'm not saying you're biased. I'm just saying that when you're looking at a chart, a lot of times, if you're bearish the market, you might look at that and say, oh, we've got a double top in play. And if you're bullish, you might look and say, oh, we got a cup and a handle's forming. It just, again, it depends on, what your own personal bias is sometimes. And I say this because I'm very guilty of it. But the key is going to be the confirmation.
Exactly.
If it
a pattern is not a pattern until it confirms.
Correct. If
this wouldn't even be a double top until it drops below the confirmation line.
Exactly. And it's not really a cup until you get a handle and then you break back out to the upside. So
Exactly.
Very, very interesting. But you also raised the point about energy, the fact that that is your only group right now at Decision Point that's on a sell. So I was going to maybe ask Mary Ellen, as far as energy goes. I mean, I'm looking at the crude oil prices now, which haven't gotten back above the 50-day moving average, but we've had a pretty good run here in crude oil prices from under $51 a barrel back up to 58. We got maybe a minute or so here before we need to start wrapping up. But Mary Ellen, what do you think about energy stocks here with crude oil starting to move back up?
Yeah, that is interesting. Of course, a lot of it geopolitical, the conflict in Iran, and the big number from what I've read is 60. These guys need to see at least $60 a barrel and above before turning bullish. That's the magic number. Particularly a lot of these producers, they need to see at least a $55, but 60 would be the number apparently that would really trigger a potential upside for some of these energy guys out there that are producing oil. So I think we still certainly have work to do. We have not yet reversed that downtrend, despite a nice healthy advance that we've seen here over the last 5-6 days.
Yeah, I would say too, I mean, looking at that, and I know Erin was pointing out that the crude oil dollar WTIC down there, I've got a little bit larger chart, but I find that $60 level also very interesting here because we had the breakout in April above 60. We came back down, we tested 60. And then when we had that big breakdown here, you can see in the third, fourth week of May, it came on very, very heavy volume. We lost that 60 level and notice the initial attempt failed at 60. And now here we go, trying to get back up to the 50-day moving average, which, by the way, is up near 60. So I'm looking at this the same way. I think that $60 level, if we hit it and we roll back over, this is an area you want to be out of. And I think the dollar is going to have somewhat of an impact here, too, because the dollar, we've seen weakening of late. We've been in an uptrend on the dollar for the last 8 years, and energy, along with materials, has really struggled and has held back the S&P 500 for the past almost decade now. So that, I think the dollar is going to play a big role here as well. All right, well, we got probably one more minute. Any final thoughts? I'll tell you what, in the next 30 days, do you think the S&P 500 breaks back to an all-time high at any point in the next 30 days?
Oh, that's hard. I'm going to say in 30 days, I'm going to say no. I'm going to say no. I don't think we'll hit that all-time high. We've got some more work to do.
All right,
I'm going to be a contrarian, and I think on Friday, Trump is going to have, no, I'm kidding, they're not going to make a final decision then, but the optimist in me is going to say yes.
Yeah, I thought you had some big announcement. I thought we were having breaking
I know.
Market Watchers Live breaking news. Trump China accord has been struck. No, that's not it. We're kidding.
Yes.
I'm gonna say yes too, and the only reason I'm saying yes is we're heading into earnings season, and historically we do tend to see the market do well into earnings season, and then maybe a little pullback after that. So, but it's been a great session. I really thank both of you for joining Market Watchers Live today. It's been a lot of fun.
It's been great.
Yes.
Thank you.
All right, and of course we also want to thank all of you for being with us. Please remember to complete the survey as you exit. It is located below your video player. It's a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Tuesday afternoon, everybody. We'll see you back here tomorrow. Happy trading.